When a new trader joins Predicting Alpha, the first book we recommend they read is called The Laws of Trading by Agustin Lebron. It's not only an amazing book on trading, it's a phenomenal book on decision-making in general, helping you shape the way you think about the world so that you can go out there and actually find good opportunities. In this podcast, I had the pleasure of sitting down with Agustin to have a really candid conversation about what it takes to make it as a trader. This was an awesome conversation. I really enjoyed having it, and I think you're going to get a ton of value. So with that being said, my name is Sean Ryan, co-founder of Predicting Alpha and the host of the Predicting Alpha podcast. Let's hop into the conversation.
Cool. Well, thanks for having me, Sean. This is good to be here, certainly.
Brilliant.
Yeah. So, I know you asked me to kind of give maybe a little bit of a bio about myself and kind of my career. So, I did engineering in school, and then I got a job as an engineer. I was designing front-end radio chips for cell phones and GPS receivers, that kind of thing. And right around 2006 or something was the poker boom, right? The online poker boom, like Chris Moneymaker, all that stuff. And I thought, okay, well, I'm going to get into that a little bit. And it turned out I enjoyed it, and I was getting good at it, getting decent at it anyway. And at the same time, the engineering was getting a little bit more, we'll say boring. It's just design cycles get compressed. And so you get to do less and less interesting stuff. And it's just more cookie cutter kind of stuff. And so I decided, well, this isn't going to be a great 30-year career for me. I don't want this. And so I decided to look for jobs that were half engineering and half poker. And of course, that pretty much describes trading really well. And so I went into my boss's office in January, like my first week of January 2008. And I said, hey, look, I'm quitting. I want to look for a job in finance. And he said, okay, yeah, too bad. Hate to see you go. Are you sure you want to do this? Yep, great. And so then fast forward, like mid-March, I had found a job. I had gotten an offer from Jane Street, and the world is imploding. We were traveling around like Sequoia area, and we heard that Bear Stearns had imploded. And my wife looks at me and she goes, "Is this bad for us?"
Yeah. Do you still have a job?
So like I called my future boss, and I said to her, "Hey, I heard Bear Stearns is imploding. Like, is this good? Do I still have a job here?" And she said, yep. Listen, I can't talk right now. Trading's really busy, making a ton of money. Can't wait for you to get here. Bye. And that was it. So
nice.
I feel like I was okay. So I worked at Jane Street for a bunch of years, and left Jane Street 2014, came back to the United States, and now I do whatever it is that I do now. It's unclear.
It's something you often hear, and I want to pick your brain on it, is you hear people coming from like a physics background or an engineering background, and you also hear tons about poker. And for some reason, it's like poker, physics, and engineering and trading are like the trifecta of sort of risk-taking, variance-based, careers
right,
that seem to always coincide. And why do you think that is?
Well, and it's the skill set, I think, at least for the kind of trading that I've learned to do over the years. It's very informed by math about statistics. And so there's that side of it, is being able to think analytically about problems, certainly. But the other side of it is knowing those other non-analytical things, or being comfortable in those spots where you have to make a decision with incomplete information for lots of money, and the results ride on your decision. You can make a good decision and lose. You can make a bad decision and win. And understanding that at a very emotional level, I think, is important too.
100%. And I think that this is the biggest thing about trading that is like the real challenge. It is that decision-making component, right? It's the name of the game is who can make better decisions over an extended period of time.
Right. Exactly.
And things that I loved in your book were, that were eye-opening to me because they were well worded, were things like the parts about like information asymmetry, evaluating decisions. I found all these parts to be really valuable. And so what I wanted to ask you about is a process for evaluating information when you're dealing with maybe incomplete information, or when there's a lot of noise and maybe very little signal out there. Right. How do you go about actually making a decision in a world like that?
Yeah.
Specifically trading as well.
Yeah. So I think fundamentally, the first thing I think it's important to say is that there is no clear answer, right? In some strong sense, there cannot be a clear answer. And that's because it is a competitive world. And so there are other people trying to solve this exact same problem as you. And so if there were a very well-defined process or procedure that would get you to the right answer, at least good answers, then that would get competed away. And
Mm-hmm.
so that's the balance, right? You need to have enough of a process around how you're thinking about problems, what your goals are, how you're arriving at those goals, with some of this other stuff, the stuff that well-trained human brains are so good at, which is, this is a weird random thing that I think I have to think about. And that's experience, that's training, that's having good mentors.
Mm-hmm.
One of the things I think I tell a lot of retail traders that I talk to is, if you're out there trying to figure this out on your own, in the sense that you're reading Twitter or whatever, you're not going to do well, probably, because it takes that interactive help of somebody who's been there before, who's more senior, for you to accelerate your learning process. I think that's really important. I think, obviously the community that you've built is an answer to that.
Mm-hmm. I appreciate that. And I actually 100% agree with you. And maybe I'll ask you a bit more about that, because so for me, for example, I was a little lucky where I had some people in my family who were trading professionally. So it didn't take me too long to be able to sort of say, okay, this is definitely the wrong way to be going, and maybe this is a better path to go, as a generality. But then, for my business partner, for example, and others I've known, being able to learn from someone who is way ahead of where you are,
right?
And maybe is good at the game that you're trying to be good at, right? So they're not necessarily, you didn't find them because of good marketing or anything like that. They maybe are managing money, or they are winning at that game in particular. Was a absolute game changer. So how can did you have that in your career?
I mean,
I guess through Jane
I did, right? Like, I came into my life at Jane Street having no trading experience whatsoever. I mean, aside from buying the odd stock on your personal whatever account, basically zero. I knew nothing. And in fact, day one, walking into the door, I didn't actually really know what I was going to do. I remember clearly telling my wife, we had just moved to New York, we're in temporary housing, and I get up to go to work the first day, and I said to her, look, and I'm pretty sure I don't have a clue what it is I'm going to be doing today, because I got interviewed kind of partly as developer and partly as a trader, and then I got an offer that said trader, but I wasn't sure what that really meant. And so I walked in day one, I didn't know what I was going to do. And so day one, basically all I did is I sat next to senior traders, a senior trader in particular, and it became obvious that my job was to do menial stuff and learn as much as I could about the other stuff as fast as I could. That was my job. And it was awesome. It was a great job. Like, when you're getting paid to learn interesting things, that's about as good as you can do. And so that was my job for months and months and months, is just try to learn as fast as you can about this stuff.
100%. And so I guess the last thing I'll ask you about that in particular is, obviously there's a ton of really good books out there. There's obviously this VolTwit and FinTwit space has some merit, and it's awesome that people share their ideas there. Yeah. Do you think that it's imperative for someone to find someone to learn from? Like, would you say that is like a key component of it, or does it just shorten the learning curve?
Yeah, imperative is far too strong. I'm sure there are people out there who are autodidacts and they figured it out and they're doing just fine. I'm sure there are people out there like that, but I think for the average person, it just, like you said, it shortens the curve and it makes things significantly easier. It's just going to go down fewer paths, fewer bad paths.
100%. So when you were at Jane Street, like, I feel like these huge liquidity providers and market making firms are, some people think they're the enemy. Some people have no idea what's going on there. It seems like this sort of vague, mysterious thing out there. So I really want to ask, like, obviously without giving away too much of the secret sauce, when you're working at a place like that, what is their edge? What is the edge that a place like this has over the market that makes them this giant?
Yeah. So I think there are multiple answers to that question based on the level of abstraction at which you're asking the question. Because you can sort of answer the question at a very base level by saying, Well, their edge is that they understand prices better than the marginal participant in the market, right?
Yeah.
They understand either what prices are good to trade against or where prices are good to provide because there's order flow or something like that, right? So at a base
Okay.
level, that has to be true. At a higher level, it's certainly true that that on its own is not enough. And in some sense, Jane Street's biggest edge is that Jane Street isn't bad at very many things. Jane Street is pretty good at almost everything. And it turns out, in order to be good at trading, you need to be good at decent at almost everything, not just the tradings, not just the systems, the cost structure, back end stuff, relationships. All of those little things are tiny sources of edge that add up. And because trading is so competitive, you kind of have to be good at all of those things. So that's kind of maybe the
Mhm.
organizational level, right?
Okay.
And then I would say there's the highest, the meta level, the thing actually that interests me the most, which is fundamentally Jane Street has an edge because they hire really, really good people and they put them in a good situation to be able to succeed. And so if you hire really, really good people and you put them in good situations where their interests are aligned, like you're just going to be successful in anything. It doesn't matter if it's trading or selling widgets, right?
Yeah. Okay. That makes a lot of sense. And that's really cool actually, because it really shows like, I think something that always gets forgotten or sometimes gets forgotten in the retail space is that trading is actually a business. It's a profession. It's a career. And so you have these companies that like go out of their way to employ the best in so many different aspects of the business. It's not just like you've made money trading. Okay, let's hire you. It's like there's all these different components that sort of work together, just like any other business out there.
Exactly.
But as a retail trader, I don't have the luxury of going out there and hiring a team and
Mm-hmm.
buying the best infrastructure. But I do think there is still edge for the smaller fish. Maybe
Mm-hmm.
it's for different reasons, like playing in a pond instead of the ocean kind of
Right.
idea,
Exactly.
right? So, what are your thoughts on sources of edge for retail? Right? How
Mm-hmm.
can someone like retail compete against a Jane Street, or do they go out of their way to stay away from that?
Yeah. So
What are your thoughts on edge for retail?
yeah, obviously retail people shouldn't compete against Jane Street on the trades Jane Street is doing, right? I think that would be a mistake. I think we could probably agree that that would be a mistake.
Yeah.
And as you said, a lot of the sources of edge that retail have is because of things that aren't worth the bigger players' time to spend time on because it
Mhm.
doesn't scale or because of some other reason. Um, and so one of the big sources of edge for retail is really, really deeply understanding a niche, either industry or product or something like that. We have this notion, I think, or you see this notion a lot with retail traders that, oh, well, I need to figure out a couple of little techniques so that I can scalp a couple of points on the
Yeah.
spoos or something. Like, those aren't going to work, and I'm going to maybe get flamed for it, but those don't work. They just don't. Okay, what does work is, or what can work maybe, is maybe actually I had a Twitter conversation the other day with a person who's a turbine engineer
Okay.
and getting into trading, has been doing trading and stuff like that. And so what could that person's edge be? Well, they probably understand the world, the industry of turbine manufacturing certainly better than me,
Hmm.
and probably with a bit of effort better than any Wall Street analyst,
Yeah.
right? And so could they trade the, I don't know, 4 or 5, I don't know how many companies there are, 4 or 5 companies, like maybe the earnings on those or the options on the earnings on those? Yeah, that sounds like a plausible source of a small amount of edge for somebody in that spot. It's not sexy, it's not exciting sounding, but that's probably a good source of edge.
One,
Stuff
one
like
that I
that.
thought of like that, because I actually agree with you. I think specialization by industry or like skill sets that you have outside of trading is it's like something unique to you. And that
Right.
tends to be a source of edge. So for
Mm-hmm.
example, one that I thought of was let's say you've had a ton of experience working in software startups and you kind of have a really strong idea of the turnaround to get certain types of projects done and certain products released. You could maybe take a look at like the micro cap software
Yep.
space and look at the timelines and forecasts of development for these companies or fundraising or something like that, and
Yeah.
maybe you can
Figure something out.
figure something out, right?
Right. Exactly.
So would you say that you think specialization is more important than having broad generalization as a trader, or do you think there's a balance there?
So yeah, it's the whole T-shaped skill set thing,
Yeah.
right? Where you need enough of all of these things in order to not get smoked by them. Uh, but you definitely need some of those sticks in the tea, right? Something where you go deep. So it's a balance for sure.
Okay. And, something that I've, in the retail space, it's always a battle between the two, is the idea of like systematic strategies versus like more like discretionary, like one-off trades maybe.
Yeah.
Do you think in the retail space, the average trader should be focused on trying to build out a system or getting good at just like evaluating individual situations? Where do you think like more edge lies for a retail trader?
Yeah. So the fundamental problem you're trying to solve is, well, it's actually two of them, right? The reason that these systematic kinds of strategies are attractive is because often it just lets you trade more frequently. And so getting more data points lets you get that signal to noise ratio up over time. That's one thing. And the other thing is, if you stick to something systematic, you don't fall prey to some set of human biases that we all fall prey to. So that's the attraction. But of course, again, getting back to the conversation about having a procedure, there's sort of this, like, the efficient frontier of trades and strategies that are available out there that have been competed away is naturally going to make you have a bit of both, right? Some amount of systematization, so you get the benefit of the large N and avoiding biases, while still retaining some of that special sauce that you have, that you're going to try to put it into words or systematize it, but it's going to change over time. It's going to be particular to you, etc. That's probably the efficient frontier of where edge is.
Interesting.
I feel bad here, Sean, because I feel like I'm answering your questions with both all the time.
Yeah, I know, but I think you're doing a fair enough job explaining both sides. And like you said, the answers aren't always a 1 or a 0. It's sometimes a little more.
I mean, sometimes they are 1 or 0. That's I think those are the fun.
And then I guess sometimes it's both.
Right. Yeah.
So how do you think? So this maybe is an interesting conversation. How do you think strategy should change, or like more systematic or discretionary, or any of these factors relative to account size? Right? Because obviously, doing 8% a year on $1,000 isn't very exciting, but 8% a year on $10 million is enough to live quite comfortably. So,
right.
How do you think strategy should change, or the way someone looks at markets should maybe change or not, relative to their account size? Let's say somewhere between like a 10K account, a $500,000 portfolio, and let's say a $5 million portfolio.
Right. Yeah. So I think it gets back to some of the things that I said in the book, where being really, really clear-eyed and understanding the source of your edge really, really well is what's going to inform your beliefs about the capacity of your strategy. And I think that's kind of what we're talking about here, is what is the capacity of the strategy? Capacity, kind of defining it as, how big can I do this trade and for it to still make money, or enough money to be worth doing, right? Some strategies just have a natural cap on their capacity, right?
Want to maybe explain that a little bit?
Yeah. So, well, just think about it this way. If I had a strategy that kind of made a bunch of money or was very profitable, but it only applied to 4 microcap stocks in Thailand, right? There's a natural cap on how much money I can deploy on that strategy, just because those things don't trade very much, right? Conversely, if I found a source of edge that involved, trading the S&P 500 a bunch of times a day, that has much more, or the S&P 500 future, that has more capacity, right? I can definitely deploy a few $1 million doing that. And I could go even further, right? I could put on these massive macro bets.
Yeah.
And those have like essentially unlimited capacity. You could put billions of dollars to work on a bet on US interest rates, let's say, like on a 2-year bet on US interest rates, right? And so that's just the nature of the strategy that you have, right? Like, how big can you do it? And so when you're talking about your portfolio size, really what you're talking about is how big can the strategy get before it stops being profitable.
Well, so, but also with that, if you're looking for an edge in the S&P, you're probably not going to find the edge that gives you, 100% a year return, right? Like, it's very unlikely you'll find something like that, because I think it comes back to the Jane Street conversation, where you don't want to be competing against these guys who are like, have the best teams, the best infrastructure, everything like that. Right. And they tend to be the bigger fish, so they tend to be over there.
Yep.
Besides, so I guess it makes sense if you have a smaller account to try and look for something with maybe a lower capacity,
Yes, inherently. Yes,
right?
absolutely. You should look for those weird niches and corners.
Mhm. Are you able to share any besides, let's say, the obvious of like market cap that maybe would have this smaller capacity? Like any ideas that you
Sure.
think are worth exploring?
Yeah, foreign countries certainly is a thing.
Okay.
If for example you are, I don't know, you're an immigrant to the United States, your family came from, I don't know, Turkey or something,
Mhm.
right? You probably understand Turkey, or you could sort of more easily get to a point of being able to understand Turkey and Turkish stocks better than somebody else who's random person sitting here in the United States. Of course, you might not understand it as well as somebody who lives in Turkey and lives and breathes it, but you have the advantage of living here and understanding things here. And so there's sort of
Mhm.
that kind of Venn diagram, that intersection, right? So countries is definitely a thing.
Okay.
Um, Regulatory regimes, like there are certain things that many funds and other entities kind of can't do for regulatory reasons, either because they have covenants. So for example,
Yeah.
many places can't trade stocks that are smaller than something like we talked about, the market cap, or maybe even a certain sector, right?
Interesting.
Sports betting, for example, right? Like
Yeah.
you can think of that as a thing that most legit financial companies don't touch. Some of them do,
Mhm.
but most of them don't. Maybe there's edge there. Of
Like
course.
tobacco companies, things like that,
Well,
or
so the thing about that is that that's more of like that. Maybe the ESG thing is another topic,
mm,
but you should think of those as like trades kind of don't care about the sector in that sense, like
okay,
whether
like
there's
the morality of it, like the what the
right,
sector's
exactly,
doing.
like
So, yeah, whatever.
investments do, but trades don't, if that
Got
makes
it.
sense.
Yeah. Okay.
Yeah.
Yeah, and like what you know,
Oh, and one other thing, Sean, novelty. Like if there's something that's brand new and just got listed, there's probably not a lot of systems that are trading it systematically at these big places, because it takes time to get historical data, to build
mhm.
models, blah blah blah. So if you can get in there first and just figure it out before everybody else, it's probably a good source of edge.
Yeah, right. Because if it's a new product, let's say, or something like that, then there's no one's priced it yet. You can maybe
Yeah,
come in and take your stab at being the first to put a
right.
fair
It's the
value on
first
this
one.
asset, and maybe make some coin. What do you think about maybe like liquidity? Like I guess that would be related to capacity.
Hmm.
Like, so do you think it's worth looking at more like illiquid stocks, or would you still
Yeah.
want to have that liquidity as a retail trader, just maybe not the volume?
Yeah, so I mean they go together, right? Because it's not like they're orthogonal things, right?
Mm-hmm.
Trading volume, liquidity, eyeballs, dollars, like they all sort of turn into the same thing in the
Mm-hmm.
end. So they're highly correlated with each other.
So when we're looking at trades as retail traders, and actually, maybe I'll start off by asking you this: since you've left Jane Street, are you still trading your own book, or are you more so into? I know you have your own new company in the hiring space. Are you
Yeah.
doing any trading right now?
So up until a few months ago, the answer was no. I mean,
Okay.
other than very sporadic one-off trades, um, my after I left Jane Street, the thought was pretty simple. I can't compete with them. I don't have the cost structure, et cetera, et cetera. The stuff I know how to do, that I know how to do, I can't do as a retail person.
Mm-hmm.
And so the right thing is to do nothing. Now, that said, every once in a while, really, really crazy stuff happens in the market where it's obvious, right? Like spring of 2020 was a
Mm-hmm.
thing. I don't know if you remember when oil briefly went negative, like oil
Yeah.
futures went negative. Like it doesn't take a genius to figure out you should just get long some oil futures and wait for it to go back to normal.
Yeah.
Like sort of fairly obvious trades like that, I still would do, but I mostly just didn't do any trading. So that was the story up until a few months ago. Um, Lately, it's been I've gotten into the crypto space a decent amount, and so now we're starting to do a little bit more trading in crypto,
Mm-hmm.
growing all the time. So that's kind of where I'm focusing my trading thoughts on these
Are
days.
you focused on like crypto derivatives, or are you more in like the Delta One sort of crypto space?
Uh, Delta One derivatives, certainly,
Yeah.
like perp futures and that sort of thing, cross exchange
Okay.
arbs. Trying to look at everything that's fairly sensible that is adjacent to stuff that I know, and trying to learn about the stuff that isn't that adjacent to what I know. It is a
Interesting.
massive, massive world that is changing all the time.
So was it the opportunity in the product that brought about this? this comeback to the trading space, or was it some sort of maybe change in the way you viewed things in general, like the questions you would ask when you looked at trades? What sort of drove this comeback here?
Yeah, well, part of it was certainly, having the time a little bit to be able to devote to it. And part of it was just, getting to talk to really smart people that were interested too, and kind of working with them a little bit. That definitely helped as well. So combination of factors.
In a sense, you had like a restart for your trading here when you came back. And one of the questions I wanted to ask you was, if you had to start over again, what would you have maybe done differently, or would you have done things the same way? How would you have changed
or
the way you learned about trading?
Sorry, say that again.
Yeah. So one of the questions that I want to ask is, if you had to start all over again, right? Ground zero knowledge. What did you say?
You said from the very beginning, you're saying?
Yeah. So if you just had to, if you were fresh to the trading field again, obviously with the experience, like knowing what you know now, if you had to start again, what would you do differently?
I would definitely still take the job at Jane Street. I think that's a no-brainer. I might have made some slightly different decisions about what desks to want to move to. But fundamentally, I probably would have done fairly similar things. I'm quite certain I would have gotten into crypto significantly earlier than I have. But I think everybody would say that. So I don't think that's terribly novel.
Yeah, I'd bet on Tom Brady winning this many Super Bowls, and
no, but I think there was definitely a couple of inflection points where there were sort of decisions that I made on, should I look into this some more, and just kind of made the decision, well, maybe not right now. And so probably would have gone the other way on those.
I've got a funny one like that. I looked on my old desktop computer the other day, and I have the original Dogecoin wallet downloaded, because I had tried to figure it out back in like 2016 or something.
Right.
Never got it. Just gave up on it. And now I'm sitting there going,
go figure.
Oh yeah. What are the odds?
Love it.
Do you have any, one thing I like to ask people on this podcast is just about trading stories. I feel like we don't hear enough of any, bad beats or like awesome trades. Do you have any trading stories that you think would be fun or valuable to chat about, and maybe sort of went into it? Yeah.
So certainly the story that comes to mind the most is fairly early on in my career, where, I was on the options desk. It was me and somebody else in London. And this is in late 2008. And we were trading a bunch of products, including some DAX options. And the senior person on my desk, he left to do some recruiting stuff for a day. And so my job was just to hedge the deltas on our book, but mostly just the DAX stuff. And so that's what I did. We were long some stuff, and so long some options. And so, DAX would tick up and I'd sell some, and DAX would tick down and I'd buy some. And it was pretty straightforward. Like, it was pretty no-brainer stuff. I did notice that given the amount of vol on the day and that sort of thing, I was trading more size than I kind of had remembered us trading the last few days. This was kind of weird. And then our counterpart in New York, he comes on the video chat, early. And I was like probably 11 or something, 11 a.m., 11:30 maybe, London time. And he said, "Oh, how's it going? Good. So tell me about the trading you've been doing." And I kind of talked to him how much I'd bought, how much I'd sold. And he goes, "That's kind of more than I would have expected."
Interesting.
And that's when it dawned on me at that moment that I had forgotten the multiplier. So the DAX multiplier, it was 5. And so I was trading 5 times as many contracts as I should have been to be hedging this book.
Oh my God.
And so, I wanted to crawl under a rock and die.
Yeah.
And everything inside me was screaming, like, try to make up a story, man, for why you did this. But I don't know if it was like, it definitely wasn't a deep sense of moral rectitude, but more just I couldn't come up with anything. And so I just said, look, I fucked up the multiplier.
Oh, no.
And like, oh man. Okay, well, let's figure out what our delta actually is, and then we can talk about it. And I was positive I was going to get fired. I was like 100%. I'm going to get fired here. It's been a good few months ride. But I did not get fired. We talked about it, figured out kind of what I could have done differently. And that was a big eye-opening experience for me, actually, to be in that spot.
How come?
And for the firm to sort of have that mindset about, well, made a mistake, blah, blah, blah. And so even though it was like a few $100,000 mistake, it was,
I was going to ask about that,
okay.
because it sounds like you caught it pretty quick, right? Maybe like an hour later, but
Right.
I was going to ask, like, because obviously with so much size, it's like, what's the damage there?
Yeah.
And
so in expected value terms, the damage isn't that big, because in expected value terms, you're basically just paying more fees than you should be, right? But in actual practice, the deltas did go against me some, and so there was more money
lost
than
a little
it
bit more.
should have been in expected value terms. But
so one thing you always is like a thought about the industry is that it's like super cutthroat, and a mistake like that definitely fired. What has your experience been with that? Is it as like cutthroat as it seems in terms of the expectation of performance, or is there
Right.
some understanding of a learning curve? Because, for example, you came in with some of the base skills that would make you a good trader, but without the tangible trading experience. I'm sure that there were mistakes along along the way. And what's your experience with that been?
So I think, prop trading firms, actually, there's a good Twitter thread yesterday. Prop trading firms are very heterogeneous, right? And I feel like there are two stable equilibria. Stable equilibrium one is kind of borderline scams, honestly. And I because your audience is retail traders and might be interested in something like this, I will tell you, many prop trading firms are just outright scams. If they ask for a capital contribution, run away. If they don't pay you a salary, run away. These are scams. Places like those, you don't last very long, right? Like, you make a mistake, you're gone, right? So it's a stable equilibrium of hire a bunch of people, fire a bunch of people, and whoever sticks around manages to survive. Great.
Cool.
There's another stable equilibrium, which is the Jane Street equilibrium, which is spend an ungodly amount of resources trying to identify, attract, interview, hire, and train good people. And so, well, if you're doing that, then you can't have the quick trigger on firing them, because that would make no sense at all. So that's another stable equilibrium. There are companies like Jane Street and many others that are like that. And so you need to kind of figure out which one of the two you want to be.
Yeah, exactly. It's like, it's one of those, if you've made it in the door at a place like Jane Street, the turnover is probably pretty low.
It is extremely low.
The hard part's getting in the door.
Yeah, that's right.
Yeah. Once you have your seat, though, it's probably okay. I think that's very valuable for people to hear, because I feel like there's like some stigmas around the industry that hopefully that helps dispel a little bit.
Rightfully so. I mean, that's the thing about it. And the thing that's actually kind of terrible about it, in fact, is if you're a smart, good person, and you don't know much about the industry, you're going to be probably thinking that what you need to do in order to attract the attention of a Jane Street or somebody else is to show your trading acumen, trade a bunch, learn a bunch, blah, blah, blah. And in fact, that does make you attractive to the scam shops, but makes you unattractive to the good places, because the good places just see that mostly as stuff they're going to have to unteach you somehow.
Yeah.
And so it's actually counterproductive a lot of the times to do some of that.
So, Augustine, why did you leave the professional trading space? Right, it sounds like you had a good gig going there. Was it a
good gig?
Interest, or what changed it?
So, I mean, I did have a good gig, and I can't speak highly enough about Jane Street, about the people there, people that are still there, people who have left. I mean, it was a phenomenally good place to work. In my case, there's kind of a number of things. Certainly, part of being an employee at a proprietary trading firm is that you're expected to not have much of a public persona. Now, that's just part of the deal, right?
Yeah.
But I wanted to write this book, right? And so, not because I thought I had anything terribly novel or innovative to say, I'll be honest, like, it's just because I wanted to see, A, if I could do it, if I could get a publisher to like take it and publish it, and B, just to see if I could do it. And so that's kind of a personal challenge for me. And so that was part of it. But also, look, I tell my kids all the time, people say life is short. Like, no, life is long. Life is very long. And there's lots and lots of interesting things to do in the world. And I was an engineer for a bunch of years, and I was a trader, and let's see what else is out there. There's nothing wrong with seeing what else is out there. So it wasn't so much a push as maybe a pull of the unknown that maybe made me transition.
Interesting. That's very cool. And now, how long after? So you left Jane Street, then you wrote the book,
Mm-hmm.
and then that's so funny that you wouldn't have been able to do that as a employee of a firm.
Sure.
And then how long after that did you start your tech recruiting business?
Yeah, so it's funny when I left Jane Street, my thing was I kind of hung up a shingle as a technical consultant, mostly
Okay.
machine learning stuff. Like I knew people that had interesting machine learning problems that were really, really hard. And so, I got involved with that for a little bit, and doing some consulting in the machine learning space and, a bit of trading space. But I'm fond of saying that every technical consultant turns into a management consultant, whether they want to or not. It's kind of a thing I say a lot. And so companies that I talked to, they just ended up having a lot of the same problems again and again and again. And on the hiring space in particular, especially in the last few years, now that's a thing that I feel I have a decent amount of experience with. At Jane Street, I actually added it up. I've conducted on the order of 2,000 technical interviews in my career, which is a lot. And after a few hundred, I thought, okay, I'm pretty awesome at this interviewing stuff. And then after a few hundred more, I realized, this is way harder than I thought it was. And I actually have to get good at it. And Jane Street is a company that I think has phenomenally good hiring practices. And so a lot of stuff that seemed obvious to me that these companies weren't doing. And it's just like, well, look, let me just help you out with some of this stuff. And it worked, right? They started getting better hires. And I thought, okay, well, there's a business here, obviously.
Now, I'm sure coming from your data science quantitative background that some of that worked its way into your process for hiring. And you and I briefly chatted about this in a DM prior to setting this up, but what sort of overlaps did you see or maybe taking advantage of even between the trading world and the hiring world?
Yeah.
What are you seeing there?
So it's funny that so we have a process that we put together, and we're in the process of rebranding it. But the very we call it a playbook, and the very first play of that playbook is called Moneyball for Nerds.
Okay.
Which is, how do you figure out how much you have to pay your people? That's like a super fundamental thing that you need to figure out. And that is very much informed by my experiences in trading, because the whole thing here, especially for startups that can't compete with large software companies, is figuring out where your edge is, where the undervalued skill is in the market that you need, or undervalued relative to what you need, so that you can identify that and then get good value for money in the people you hire. So that's a very clear spot where trading informs decision making about hiring. The other thing is just figuring out what the right KPIs are, what to track, how to figure out whether the process is working, how to iterate, how to get better at it. That's another sort of, again, that's sort of instinctive at this point for how to think about things in that way.
So do you almost like, do you take, so for anyone who's listening that hasn't watched the movie Moneyball, obviously recommended to go watch it. It's a great movie. Would you say you almost look at, let's say you're consulting with company ABC and they have a team of 20 employees. Do you almost view that as like a sports team and you're trying to,
sure.
Like, is that the same sort of lens that you are looking at it through?
Without question. Like, you need some starting pitching, you need some this or that. A lot of what we do with the hiring consulting is obviously consulting on organizational structure, like how you should organize teams and who you need and who's missing and how do we figure out how to fill gaps and that sort of thing.
And then I guess do you almost have like KPIs for each of these different like positions within an organization, so that then you can go out and like in the movie Moneyball, instead of saying, oh yeah, he's got a great swing, it's now like he gets this many bases.
Yeah.
You have that you can go out and then apply to the market.
Yeah, no, it's not quite that granular, and the reason is because like there's a common failure mode that almost every technical organization starts out living in, which is overvaluing technical skills. Because that's the easiest thing to test for in an interview. It's just, do you know Python? Do you know whatever? I can evaluate that. But more general thinking abilities, are they smart? Do they know how to debug weird stuff? That kind of stuff is harder for technical people to evaluate. And so they don't end up doing it. And so then when people fail, it's not because of the technical skills, it's because of this other stuff. And so, and back to the Moneyball thing, there are a lot of spots where these sort of more general abilities, because companies they're not good at evaluating them, and we can help them do that, that they get super good value by identifying individuals that just have these other abilities. The skill stuff, they're going to pick that up. So that's kind of one of the ways that this manifests itself.
It's really interesting because you can just hearing you talk about this, it's almost like we're talking about trading. It's like it's very, very interesting. And I want to ask you another question about data here. So we can talk about this in trading, outside of trading, whichever. But basically, in the professional space, everybody has access to data. Right? Sure. In the retail space, I would say having access to data is a little rarer because who can afford something like a Bloomberg? It's not, predicting alpha. That's why we exist. But on the other side, everybody has the data. So that can't be the edge, right? No. The edge can't be having access to data points. No. So what do you think it takes? Like, how do you find an edge in data? I feel like, that's something that's still a little mysterious to the retail trader. How do you actually find an edge in data?
So there's this, within the world of trading, I think a productive model to use is this idea of you have prior beliefs about the market or about things you think are interesting or that you want to look at. And so you form those into as coherent and cohesive a picture as you can before you look at the data. And so then you go off and because that informs how much data you need to look at, what data you need to look at, what it's going to tell you, et cetera, et cetera. One of the common failure modes, especially in the retail world, is, okay, I'm going to grab a bunch of data and then I'm just going to start exploring it. And I'm not saying you shouldn't do that, but it's very, very, very easy to get to the point of, oh, look at this thing that I found. It's like, yeah, you found that because you didn't find 50 other things you tried first, right? It's a very common failure mode. And so getting the story that you want to study, tell yourself, et cetera, ready and really well thought out before you look at data, I think is one of the ways that lets you end up using data right? That ends up letting you use data productively.
So almost like rather than trying to make something fit to the data, right? Where maybe it's like, if you took 1 million technical indicator combos and threw it over the S&P, you'll find something that perfectly predicts it. Like
I remember absolutely do that.
There was like a Jim Simons interview where he was saying they had discovered some relationship between like corn production cycles in Italy and the S&P returns. And it was like a perfect correlation,
Right.
But it's obviously not tradable.
Yeah, exactly.
So would you almost say it's better to almost like a scientific method, like start with like a hypothesis?
Right, exactly.
Right? Like some sort of idea about the world, or like, this is interesting. Why does this look the way it does? This was weird. And then try to explore it from that perspective. Do you think almost that's a way to do it?
Yeah. And that's, I feel like in the world of trading, when you really get into it, that's where a lot of the really interesting decisions come in. Is like well-trained humans are good at one thing or one set of things, and machines are good at another set of things. And thinking deeply about the meta problem of how do you partition the work between what the humans are good at, what the machines are good at, so that interface lines up perfectly. That's a really, really interesting problem. I think that one doesn't go away. And so going too far in one direction, too far in the other direction, where too far in one direction is, oh, I'm just going to look at a bunch of data and just do what the data says. That's wrong. And I have a really strong conviction about X. I don't need any data to tell me whether it's right or not. That's also wrong, right? It's sort of, that's the interface is where the interesting stuff happens.
So coming back to more of we'll bring it down like one level to, let's say, talk about somebody who is just starting to explore the world of, statistical modeling and data in applications for trading.
Okay.
I feel like one of the things that is so tricky is actually being able to say like, this has edge. Right? Or here's some sort of edge, or this has a inflated risk premium. Because for example, overfitting and, there could be things, for example, that have a strong correlation, but if everybody knows about it, it might not have edge.
Sure.
Right. So do you know of any like good, questions we could ask almost as like a checks and balance for our decision-making, that you think is always imperative to ask when we have an idea?
Right. So again, this gets back to what we said earlier about, if there were a procedure, it wouldn't be very useful, right? So I feel bad kind of saying that, but I do want to.
Yeah, thanks, man. That helps.
No, like
I'm
I feel
messing
bad
around.
saying it because it makes it sound as though it's just kind of this weird thing. You'll figure it out as you go along, and it doesn't feel like that from the inside. But I think the key thing to really understand is that that's the good stuff. The fact that there isn't a procedure to this, that's what makes this so interesting and difficult and endlessly fascinating to keep doing. Because if there were a procedure, then it would just kind of get boring, right? You would go off and do
Yeah.
something else. Now, to sort of answer more concretely, um, look, nothing prevents you. Costs are very low. Nothing prevents you from just trying something, right? Like if you have edge, then you'll have to figure out whether the actual results are noise or not. But at worst, if you're a noise trader, you're just going to be paying fees, right? And so as long as you're kind of within your risk limits, try stuff, right? Bias towards trying stuff, I would say, is people coming from a very academic background, from a very mathematical background, are biased towards, well, I need to get it perfect before I start trading it.
Yeah.
No, just try stuff.
No. Okay. I love that. I love that. And yeah, and maybe something like, what do you think about this? I think, almost like reflection is important in a sense of whether you win or lose. So how do you balance try stuff with, developing good methodology?
Mm-hmm.
Right. So underlying try stuff, do you think there's like a core methodology that people should be considering?
Well, before you try stuff, you probably need to have some story for yourself for how long am I going to have to try this before I have a decent idea one way or another. And again, the story you tell yourself, the structure you put around the problem before you looked at data should inform that. Like for the kind of trade that I think I'm about to do, I think I need to run it for 3 months before I kind of really know whether it's making money or not. Maybe it's 2 weeks, maybe it's 2 years, right? And being very clear-eyed about that, because a lot of the time, the answer is going to come back an awful lot longer than I'd like for me to have to run it in order to know. And so try not to fool yourself at that point, right?
100%. So I guess there's one more conversation that I'd love to pick your brain about here in particular. And that would be, where do I have the question here? It's basically a conversation about risk and your view on risk. I think, there's so many different views on risk taking and trading that are out there, but I'm interested in yours because you come from a very like edge oriented perspective, right? Like, do we have edge or expectancy? So how do you view the world of risk taking and trading?
Right. So anytime you have an edge, there is a risk you're taking in order to sort of collect that edge, right? And so a lot of the stuff you think about as a trader, or at least I think about as a trader, is what risks am I being paid to take, in the sense that I think that is a risk that I understand well and that I have identified, a thing that can make me money, and which risks am I not paid to take. So the canonical example here is Warren Buffett, right? Warren Buffett is famously the Oracle of Omaha. He sits in his office, he drinks cherry Cokes, and he buys companies, and he makes a bunch of money, right?
Yep.
So the risk that he is incredibly good at taking is identifying underpriced companies, right? So he goes off, he buys some company, and it's a good trade, except that the market crashes and he loses a bunch of money, right?
Yeah.
So in the course of buying that company, he took on the risk that he's supposed to take, which is is this company better than most companies? But he wasn't supposed to really be taking is the world going to go to crap risk, right?
Mm-hmm.
And so that he took 2 risks with one trade. And so obviously the way he could hedge that risk is by selling S&P 500 futures or something, right?
Yeah, that as long as his company outperforms, then you'd
right. So then
the
like
edge.
he's got that, he's more kind of well isolated that risk that he's really being paid to take. And so that's kind of what you're doing as a trader, is trying to identify the risks that you're being paid to take and managing the ones that you're not, either by hedging or by making sure that those don't get too big to actually materially affect your future trading, et cetera, et cetera. That's the game, at least the way I think of it. And the thing obviously that makes it hard, just to kind of put a fine point on it, is it is very easy to fool yourself about what the source of risk is that you're being paid to take.
What do you mean?
A lot of things look like, for example, I talk about this in the book. Like, let's say that you've identified, a company that you think is cheap and you want to buy it, right? Did you identify that that company is cheap, that the sector is cheap, that everything is cheap right now? Like, it's not obvious which of those it is, and the story you tell yourself is really important because that informs how you hedge your risks and that sort of thing.
Interesting. Yeah, and what do you think about this saying for risk taking? In terms of deciding what risks you want to take, an okay place to start is to look at the risks that other people don't want to take.
Sure.
Do you think that that's a decent idea for someone to start at when trying to explore risks?
Sure. Although I would say yes, but I would say in a liquid market, it's a two-sided market. And so whatever price something is priced at is kind of the market clearing price for that risk. And so it's more like relative to the marginal participant in the market, is my risk profile good or bad for taking one side of that risk or the other? So like, here's a canonical example is, downside puts. Do you want to be buying them or do you want to be selling them? Well, it depends on who you are. If you are a pension fund that has incredibly slow money that's going to be around forever, probably you should be the one selling those downside puts, right? You're selling insurance, you can handle it. People who really need that insurance against big down drops, hedge funds or something like that, they should probably be buying it. And so for your personal situation, which one kind of matches up more for you? Should you be the one selling insurance in that situation, or should you be buying insurance? And it's different, right? Like, I buy car insurance, I buy home insurance. I know I'm paying up for that, but that's fine, right? Like, that is a risk that I want to eliminate, and so I'm going to pay up for that service.
And then because you pay that premium, there's a business on the other side to provide you that service.
Exactly, right? Like, the insurer insures that, and then they sell out their insurance to reinsurers, like Warren Buffett. And it's fine. Everybody wears the risk that they are placed to wear.
So in terms of, it's funny. I actually wanted to start that conversation talking about like bet sizing almost, but then we went down the like risk exposure lens, which I'm glad we did because that's a really good conversation to have. But in terms of bet sizing, let's go to that for a second. You'll have a lot of, sort of the first things people will find about risk taking is like never bet more than 2% of your account kind of thing, or never bet more than 1%. And then maybe the next thing you find is like Kelly criterion, right? And all of a sudden it's like, I think I have a 70% chance of winning and a 1-to-1 risk reward. And all of a sudden I'm betting 40% of my account. Right. What are your thoughts on bet sizing and how should, how have you seen different, participants think about it? So maybe how have you seen like the Jane Streets think about it? Maybe the smaller hedge funds and then the retail trader and your thoughts on that.
Yeah. So, I mean, certainly to speak specifically about Kelly, Ewan Sinclair in one of his books, I can't remember which one it is, he talks about this, but and one of the things he talks about that's very, very important is there's this incredible asymmetry in the uncertainty you have about your edge in something, where if you're like, you think your edge is X, right? If you're wrong one way, then Kelly's kind of okay. If you're wrong the other way, Kelly's a complete disaster.
Yeah.
And so fractions of Kelly make a lot more sense than Kelly because of this idea of uncertainty about how much edge you have. You never actually know that it's a 60-40 bet. You just kind of think it is, right? So that's one thing to say. In terms of bet sizing in institutional situations, there's a lot of different constraints, right? It's a very multivariate thing, right? Like, you can certainly have a risk that says, no matter what, I'm never going to have more than $1 million worth of exposure in a given stock, right? That's like, no matter what else is true, that has to be true. Okay. And then you can say something else, right? Like, no matter what else is true, I don't want to have more than X dollars worth of downside risk in, I don't know, options of this type, right? So that's like a different thing. And so, these are all kind of bounds on how much risk you should put on, right? And if you think about those bounds, then whatever size maximizes profitability up to those bounds is probably the bet you should make. If that makes sense.
Got it. And then in the retail space though, like, So obviously the thing I'd started with is I think the first thing is know if you have an edge, right?
Yeah.
If you don't, then you're just choosing how quickly are you going to bleed out. So,
Right. Exactly.
We could probably agree on that, right? Like that'd probably be the underlying
Definitely.
premise is have an edge.
Yeah.
But so something that I've personally been struggling with and trying to determine is, let's say I found a couple things recently that I thought had really big edge, and then really being able to scale into that and bet according to what I believe my edge to be.
Hmm.
Do you think that's what are your thoughts on that? Like, knowing when to bet big versus like choosing that option. Do you think that there's a time and place to be doing that, like that exists,
Yeah,
or?
for sure. I think that's fundamentally the nature of trading is most of the time you're doing nothing to very small, and very, very rarely you're doing enormous size about things that happen that you're terrified about, right?
Yeah.
I call them type 1 and type 2 trades, right? Type 1 trades kind of keep the lights on and make sure that you can buy milk, and those are kind of normal, and you're probably not going to size them up very much. Every once in a while something crazy happens and you're like, this is a screaming bet, and I have to do this. I mean, we don't have to, but like I can do this in size. And yeah, there's some risks here, but it is such a huge edge that I have to do it incredibly big, right?
Mhm.
Um, that's kind of up to you at that point as a retail trader. I mean, within a company, you have senior people talking about things with lots of experience, previous situations like this, and so you can kind of collaboratively come to a decision that you can be comfortable with, whether you made money or not later. When you're on your own, that's hard,
Mhm.
man. That's hard.
Well, would you really see stuff like that happen in the institutional space where maybe there's like a risk manager overlooking and, you know, um,
For sure.
like a lot of people would, for example, believe that a lot of the institutional spaces, you know, let's get our fee and not lose all this money. Like there's
Well,
some view of
yeah.
that in some
So
of the space. How do you see that sort of balancing? Do you see, is that something you've seen in the,
yeah,
you know,
so within the prop trading world, because all the money is internal to the company, or almost all the money is internal to the
yeah.
company, then it's the people who come into work every day whose money it is. And
Mhm.
so it's a very, very different mindset than a hedge fund where you're investing somebody else's money and
Yeah.
probably somebody else as well. So that's one thing to say. I think that's
Fair
really important.
enough. Very fair.
But yeah, in those spots, like, yeah, it really is a conversation about, what bets should we put on, and how big should we put them on, and it's our money, so we better get this right. In the hedge fund world, as we all know, there's kind of a principal agent problem, right? Like if a hedge fund is getting paid 2 and 20, then their optimal amount of risk is higher than the investor's optimal amount of risk because
Mhm.
they're getting paid on a call option, so they need vol.
Yeah.
There's ways to mitigate that, and we kind of talk about that. But so there's a bit of that. But I think when you're in the trenches and you're actually making decisions, it really is just about maximizing. Like, what is the most that I should bet here to make the most money that I can in the situation? But it does happen. Like it definitely happens. Like weird stuff happens all the time. If we have time, I can tell you maybe one more
Yeah.
story.
I'm good for time.
Yeah. So this was an options thing where uh, a Dutch metal company was spinning off something, and it was just kind of a weird spin-off. And we like the options in the Netherlands adjust in kind of semi weird ways. They're actually very sensible. It's just kind of subtle.
Mhm.
And so we were expecting these new options are going to list on a certain day, and that it would be fairly easy for people to screw it up. And so we were all ready to sort of pay attention to that thing. It turns out that one of the important Dutch market makers had screwed up the original, like the thing that didn't spin off, the metal that stayed. Um, and so they were basically putting markets out that made absolutely no sense, and
Oh
it
my
like
God.
they made such little sense that it actually took us more embarrassingly long time for me and a couple other people to figure out what they were screwing up. Like they were obviously wrong. Everything indicated they were wrong, and we were doing trades against them. But until you know how they're screwing things up, you're not really that comfortable putting real size on
100%.
it.
It's like, this is so
And
messed
so
up that I can't
eventually
even
we
bet.
figured out how they were screwing up, and we managed to put some more size on. But we left a lot of money on the table that day from being just slow at figuring out what was going on. That's probably like one of the bigger should haves
Yeah.
of my trading career.
I don't think there's anything worse than that besides like seeing a huge edge, like just being like, what is going on here? And then not figuring it out in time. And then like all of a sudden it just closes and you're like, wait a minute, no, this can't be real.
That's right. Oh, it turns out it was really, really good.
Yeah.
How do I know? Because it's not there anymore.
So I want to ask you about this, and so for example, like within Predicting Alpha, there's some people who are taking the game really, really seriously and would love to create a full professional career out of it. Coming from the retail space and trying to break into the professional space, do you have any tips or paths that people could follow to get there? Maybe they don't have the PhD in physics or anything like that, but they've done a lot of self-learning. They can code, build their own models. They've maybe even developed a strategy that, generates some alpha. How can someone go from that sort of state where they've learned all this stuff to career?
So I guess a couple of questions are, why career? Like if you're doing well and you're making money at this, then why? Right? Is it because you don't have enough capital?
Could be capital, could be variance, right? Could be can't get a mortgage sometimes if you're trading your own capital. Could be a little tricky,
Right.
So maybe stability would be one of them, or learning more.
Right. So part of those answers, like all the stuff you described about having experience in trading and that sort of thing, like I said, it will attract prop trading firms that you probably don't necessarily want to be associated with, or that will give you capital that you might want, but you're not going to get that stability that you're looking for. The thing about, as I said, companies like Jane Street and that sort of thing is that kind of background just ends up being seen, rightly or wrongly. I kind of making no claim about whether it's the right thing or not, as a negative. And that's just a fact. The thing I always tell people is if you don't have a math degree from Harvard and you want to apply to a really good prop trading firm or even a bank or something like that, the thing I always used to look for, a thing that I used to look for a lot was, if you're like the third best player in the world at some obscure chess variant, I want to talk to you. Why? Because you obviously are very good at learning something and getting good at it. And that's like an incredibly important skill. And you also did it because you wanted to, because it was interesting to you, because you had that curiosity and desire, not because there was a massive pot of gold at the end of that rainbow, right? Nobody's printing money being the third best player in the world at some obscure chess variant. You did it because you're just obsessed with it, right? That's probably an interesting person to talk to, provided they have a decent amount of background and other stuff. And so I would say, highlight the stuff that you are. It's hard. I'm not saying it's easy, but highlight stuff that you are world-class at, no matter how obscure, because the world's a big place, and being world-class at something, even if it's obscure, probably involves an awful lot of effort and time and toil and learning how to learn things and blah, blah, blah.
Do you see the, obviously your experiences from, Jane Street, which is, one of the biggest firms in the world. But in just
when I started.
Yeah, I guess. Well, it made me. I'm not saying causation, but all I'm seeing is you joined, and all of a sudden it's the biggest firm in the world. So well, I don't know, but for even smaller shops, things like that, something that I've been encouraging some of the members to do is like build up some of these fundamental skills, right? That it's not just about, I've made money trading. Nobody cares if you made money. Well, they care maybe a little bit, but not really. It's like, what skills do you have? And I sort of see what you were saying, where if you've come out of like school or an engineering background, you have no bad habits, and they have their process, right? They have their way of doing things, and they can mold you into being able to do that rather than having to have you unlearn stuff.
That's right.
But if you've done a ton of projects and stuff, you've built a whole bunch of cool dashboards and models and things like that, and then maybe you get involved in like an online space, things like this. Do these things help? And like, could this manifest into a career in your eyes, or is there like some key component that they should be also considering, like sort of like the chess variant thing?
Right. So that's the thing. Anything that shows that you are incredibly hardworking, that doesn't hurt.
Yeah.
We've definitely talked to people who on paper maybe didn't stack up to, their resumes didn't stack up to other people, but you look at their GitHub repos or something like that, and it's just interesting project after interesting project that they just did, and that aren't clones of other projects that they just changed 4 lines on. They're stuff from scratch, weird stuff. People like that are always good to talk to,
Mhm.
because that innate curiosity, drive, whatever you want to call it, and we talk about that a lot in the consulting work that we do, is not easy to detect, not easy to evaluate for, but incredibly predictive. We have all the data, incredibly predictive of success almost anywhere, whether it's trading or anything else.
Do,
Can't teach that.
do you think in the 21st century, it's necessary to have some sort of coding background to get a job as a trader these days?
Necessary is probably a little bit strong, but close to it, close to
Okay.
necessary, I would say.
And would you say that's just because the world's gone a more quantitative direction now, or?
Yeah, or it's the same reason that executives have to be able to type now in the way that they didn't in the 1960s, right? It's just there's an efficiency there where if you're a trader and you can't answer your own questions relatively simply, you have to involve somebody else to answer your question. That's just a friction that doesn't have to be there now. And so it's more like part of the job is being able to answer questions for yourself quickly, grab a bunch of data, massage it, not screw it up, maybe build a couple simple tools, because by the time you explain it to somebody who's good at it and they code it up and then you iterate, whatever, it's a total waste.
Things have changed.
Yeah.
So I guess this will lead into my last question for you, which is, given the current state of trading and stuff, what do you think is necessary for somebody to stay ahead of the game, right? Stay aware of new developments, new trades, et cetera. And how can you do that as like an independent trader?
Yeah. So I think I go back to what we talked about at the top of the hour, which is, find the right community for you. Find a community of people that are highlighting useful and interesting things that you can contribute to, that kind of obviously value your input. And that's, like, humans are social creatures, and so that's a nice little flywheel for yourself too, right? Like being part of a community and getting involved in things that helps you stay there, right? Just by force of social pressure, if nothing else. So I think that's an important thing. Obviously Twitter, FinTwit has some of that for me, certainly. But you can find it in different places. People you can bounce ideas off of. That's always really, really important.
Yeah. Let me ask you about Twitter quickly. When did you start getting involved in that community? Because I love everything you share pretty much. And, that whole community is great.
Yeah.
How'd you find it? How'd you get involved in it?
So it was the book, really. When Wiley said they would publish my book, my editor said, by the way, you understand that you're going to have to sell this book. Like, you personally are going to have to sell this book. And I was like, well, I thought that was your job. Like, I'm going to write it and you're going to sell it.
Yeah.
Nope. You're the one that's selling it. And so I started a Twitter account, just started talking about stuff, and it evolved from there. Now, I'm not really selling my book anymore in the sense that, it sells, but it's not like a thing I think about.
Sells itself.
It doesn't much, but it does a little bit. And so, but it's more about just getting that conversation with other people that I think are, sharp and interesting, and learning about new things. That's the value I get out of it, certainly.
Yeah. I got to say, like, after I read your book, I was delighted to find you on Twitter. Do you do any Quora or anything like that as well? Or is it just strictly Twitter for now?
No Quora. I thought about it, but I don't know. It seems like a big time sink.
Yeah, oh, definitely. If you see it's like every response is a thread.
Yeah, exactly. So, but different people have different things. Like a good friend of mine, Aaron Brown, who's written a bunch of books that you should.
I was going to ask you about him.
Read. So he's Mr. Quora, and he's not even on Twitter. So, find your community. He's also incredibly prolific on Amazon reviews. And so.
Oh, really?
Yeah, no. Aaron is an incredibly good and prolific Amazon reviewer.
Really?
Yeah.
He's like the Yelp reviewer, but for books and products.
Yeah, exactly. So yeah, look him up on Amazon. There's a lot of gold in his Amazon reviews, actually.
That's so funny. Cause myself and especially my business partner, Jordan, has spent He's probably read every single thing that Aaron Brown has put out on Quora. So I'll let him know about the Amazon reviews. I'm sure there's a little bit of alpha in there. So
yeah, and his Bloomberg columns are always great, and his books, obviously.
Brilliant.
But,
Augustine, thanks so much for coming on the podcast. Is there any last piece of advice or comment you want to make to the audience? Anything you want to leave them with?
No, I mean, the thing that's hard about being a retail person is obviously the stuff we've talked about, right? You're kind of on your own. You don't have that support structure, et cetera, et cetera. One of the things, lots of retail traders DM me fairly regularly, and the first question I invariably ask is why? Like, why are you doing this? And I don't mean it as a challenge in the sense that you should stop doing it, but that you should be very clear-eyed about what you're getting into. And this is literally the most competitive thing you can try to do on Earth. There is nothing more competitive than this on the planet. And so what is it that's attracting you to this, right? Is it that challenge? Or is it something else? Is it in the back of your mind, oh yeah, I'm going to figure this out. I'm going to make a ton of money. What is it? And being very, very self-aware and clear-eyed about that, because there is a huge industry of people, you see them on Twitter, you see everywhere else, who make it their living to separate well-meaning, smart people from their money because they're not self-aware about why they're doing what they're doing. And so that's the number one thing that I think needs to be communicated again and again and again. Like, there's lots of charlatans, to use a Taleb term, out there. And the more you can understand yourself and why it is that you're undertaking this incredibly difficult thing, finding people who resonate with that thing that you've identified, the more protection you're going to have against the incredibly low signal to noise ratio that you're faced with day to day.
Brilliant. I think it's a good note to end off on there.
All right, Sean, this is great. I really enjoyed it. We should do this again soon.
100%.